People often ask me why I'm so passionate about real estate when the stock market seems so much easier. They say, Robert, why deal with tenants, toilets, and termites when you could just buy an index fund and forget about it? And I always tell them the same thing because real estate has made me wealthy in ways the stock market never could. Not just financially wealthy, but wealthy in knowledge, control, and real assets that produce cash flow month after month after month. Let me be blunt with you. The stock market is designed for the rich to get richer while the middle class gets poor. It's a casino where the house always wins. And unless you're the house, you're gambling with your financial future. Real estate, on the other hand, gives you control. It gives you leverage. It gives you tax advantages that stock investors can only dream about. And most importantly, it gives you cash flow. Now, before you think I'm completely against stocks, let me clarify something. I own stocks. I invest in the stock market. But I invest in stocks with money I make from real estate. That's the crucial difference. My real estate investments pay me every single month, and I use that cash flow to invest in paper assets. The average person does it backwards. They work a job, pay taxes on their income, and then invest what's left in their 401k, hoping that 40 years from now they'll have enough to retire. That's not investing. That's hoping. Let me take you back to when I first learned this lesson. It was in the late 1970s, and I had just returned from Vietnam. My poor dad, who had a PhD and was the head of education in Hawaii, kept telling me to go back to school, get my master's degree, and climb the corporate ladder. My rich dad, who never finished 8th grade but owned multiple businesses and real estate investments, was teaching me something completely different. He was teaching me about assets and liabilities, about cash flow and capital, gains, about using debt as a tool rather than fearing it. My rich dad showed me his financial statements. He showed me how his rental properties brought in money every single month, regardless of whether he went to work or not. Then he showed me how his corporate job friends were doing. They had big houses, nice cars, and impressive salaries. But when you looked at their financial statements, they were broke. Every dollar they made went right back out to pay for their lifestyle and their taxes. They had no assets producing cash flow. They were on a hamster wheel, running faster and faster just to stay in the same place. That's when I realized the fundamental difference between how the rich invest and how everyone else invests. The rich buy assets that put money in their pockets. Everyone else buys liabilities that take money out of their pockets, but they call them assets. Your primary residence is not an asset. I don't care what your real estate agent told you. If it's taking money out of your pocket every month in the form of a mortgage payment, property taxes, insurance, and maintenance, it's a liability. An asset is something that puts money in your pocket. Now, let's talk about why real estate is superior to stocks for building real wealth. First and foremost, it's about control. When you buy a stock, you have zero control over that company. You can't control the CEO. You can't control the board of directors. You can't control whether they make good decisions or terrible ones. You're literally giving your money to strangers and hoping they'll grow it for you. That's not investing. That's speculation. With real estate, I have complete control. If my property isn't producing the cash flow I want, I can raise the rents, I can reduce expenses, I can improve the property to attract better tenants, I can change property managers, I can refinance to get better loan terms, I can do 1,000 different things to improve my return on investment. Try doing that with a share of Apple or Microsoft stock. You can't. You're completely at the mercy of people you've never met making decisions you have no input on. The second massive advantage of real estate is leverage. This is where real estate becomes a wealth-building machine that stocks simply cannot match. Banks will lend you money to buy real estate. They'll lend you 70, 80, even 90% of the purchase price. Show me a bank that will lend you money to buy stocks. It doesn't exist, at least not in the same way. And there's a reason for that. Real estate is a tangible asset. Banks can see it, touch it, value it. If you default, they can take it back and sell it. Stocks are just numbers on a screen that can disappear overnight. Let me give you a real example of how leverage works in real estate versus stocks. Let's say you have $100,000 to invest. If you put that entire amount into stocks and the market goes up 10% in a year, you make $10,000. Not bad, right? Now let's see what happens with real estate. With that same $100,000, you could buy 5 properties worth $100,000 each, putting $20,000 down on each one. That's $500,000 worth of real estate controlled with your $100,000 investment. Now, if those properties appreciate just 5% in a year, that's $25,000 in appreciation. But here's where it gets interesting. You didn't just make 5% on your $100,000. You made 25% because you controlled $500,000 worth of assets with only $100,000 of your own money. But wait, it gets even better. While your properties were appreciating, they were also producing cash flow. Let's say each property brings in $200 a month in positive cash flow after all expenses. That's $1,000 a month, or $12,000 a year. Add that to your $25,000 in appreciation, and you've made $37,000 on your $100,000 investment. That's a 37% return. And I haven't even mentioned the tax benefits yet. Now, let's talk about those tax benefits, because this is where real estate really shines. The tax code is written to benefit real estate investors. It's not a loophole. It's not cheating. It's government policy designed to encourage people to provide housing and develop communities. When politicians talk about closing tax loopholes for the rich, they're usually talking about real estate deductions. But these aren't loopholes. They're intentional government incentives. Here's how it works. Let's say your rental property brings in $24,000 a year in rent. After expenses like property management, maintenance, insurance, and property taxes, you have $12,000 in net operating income. But then you get to take something called depreciation. The IRS allows you to depreciate the building, not the land, over 27 and a half years. If the building is worth $275,000, you can deduct $10,000 a year in depreciation. So on paper, your $12,000 in profit becomes a $2,000 profit after depreciation. You only pay taxes on $2,000. Even though you put $12,000 in your pocket, some years your depreciation is so large that you show a loss on paper even though you're making money hand over fist. That loss can offset other income, reducing your overall tax burden. Now compare that to stocks. When you sell a stock for a profit, you pay capital gains taxes. There's no depreciation. There's no way to offset the gains. You make money, you pay taxes. It's that simple. With real estate, you can defer taxes indefinitely through something called a 1031 exchange. You sell one property and buy another of equal or greater value, and you don't pay any capital gains taxes. You can keep doing this over and over, building a larger and larger portfolio without ever paying taxes on your gains. Try doing that with stocks. People always bring up the argument that real estate requires work. They say, I don't want to deal with tenants calling me at 2 in the morning because the toilet is broken. And you know what? They're right. Real estate does require work, but that's exactly why it pays better returns. If it were easy, everyone would do it, and the returns would be minimal. The fact that most people are too lazy or too scared to invest in real estate is exactly what creates the opportunity for those of us who are willing to do the work. And here's the secret. You don't have to do the work yourself. I have property managers who handle all the day-to-day operations. I have contractors who handle repairs. I have accountants who handle the books. I have lawyers who handle the legal stuff. I've built a team of professionals who make my real estate investments run smoothly. Yes, building that team takes time and effort. But once you have the right team in place, your real estate portfolio runs like a business, producing cash flow month after month with minimal input from you. Compare that to the stock market. People think stocks are passive investments that require no work. But if you're doing it right, you need to constantly monitor your portfolio, rebalance your assets, research companies, follow market trends, and make buy and sell decisions. And even if you do all that work perfectly, you still have no control over whether your investments succeed or fail. At least with real estate, the work you put in directly impacts your returns. Let me tell you about one of my first real estate investments. It was in the early 1980s, and I found a small apartment building in a decent neighborhood that was being mismanaged. The owner was tired, the property was run down, and it was producing minimal cash flow. I bought it with very little money down because the seller was motivated and willing to carry back financing. Within 6 months, I had painted the building, improved the landscaping, raised the rents, and increased the cash flow by 60%. Then I went to a bank with my improved financial statements and refinanced the property. And I pulled out all of my initial investment plus an extra $20,000. And I still owned a property that was now producing positive cash flow every single month. That's the power of real estate. I turned a neglected property into a cash flowing asset, pulled all my money back out, and moved on to the next deal. Try doing that with a stock. You can't. Now I want to address another common argument for stocks: liquidity. People say stocks are better because you can sell them instantly. You just click a button and boom, your stocks are sold. With real estate, it can take months to sell a property. And they're right. Real estate is not liquid. But here's what they don't understand. Illiquidity is a feature, not a bug. The fact that you can't easily sell your real estate keeps you from making stupid emotional decisions. When the stock market crashes, as it did in 2008 and again in 2020, people panic and sell at the worst possible time. They watch their portfolios drop by 30 or 40%. They get scared and they sell everything, locking in their losses. Then when the market recovers, they're sitting on the sidelines in cash, missing out on the recovery. With real estate, you can't panic sell. Even if you wanted to, it would take months to close a deal. That enforced patience keeps you from making emotional decisions. During the 2008 financial crisis, the real estate market crashed. But you know what? My properties kept producing cash flow. My tenants kept paying rent. Yes, property values dropped on paper, but I didn't sell, so it didn't matter. I just kept collecting rent checks every month. Within a few years, property values recovered, and I was wealthier than ever. The stock market creates panic. Real estate creates patience. And patience is one of the most valuable traits an investor can have. Let's talk about another massive advantage of real estate: inflation protection. Real estate is one of the best hedges against inflation. When inflation rises, so do rents. When rents rise, property values rise. Your mortgage payment stays the same, but your income goes up. Over time, inflation actually makes you richer as a real estate investor because you're paying back your loans with cheaper dollars while collecting rent in more expensive dollars. Stocks don't work the same way. When inflation rises, it often hurts stock prices because it signals that interest rates will rise, which makes bonds more attractive and stocks less attractive. Companies also face higher costs for materials and labor, which can squeeze profit margins. Real estate actually benefits from inflation in most cases. I remember in the late 1970s and early 1980s when inflation was running at double digits, people with fixed-rate mortgages on rental properties were making a fortune because their mortgage payments stayed the same while rents were skyrocketing. Their properties were appreciating rapidly, and their debt was being inflated away. It was one of the greatest wealth transfers in American history, from savers to borrowers, from people holding cash to people holding real assets. Now, I want to address something important. I'm not saying stocks are bad. I'm not saying you should never invest in stocks. What I'm saying is that stocks should not be your primary wealth building tool, especially not in the way most people use them. The average person works a job, contributes to a 401k, and hopes that in 40 years they'll have enough to retire. That's not a plan, that's a prayer. The rich use stocks differently. They build businesses or invest in real estate to create cash flow. Then they use that cash flow to invest in stocks, precious metals, and other paper assets. They diversify, but they do it from a position of strength with passive income covering their expenses. That's true financial freedom. Here's another critical difference between real estate and stocks: understanding. When you invest in stocks, do you really understand what you're investing in? Do you understand the company's business model, their competitive advantages, their balance sheet, their management team? Most people don't. They buy index funds, whatever their financial advisor recommends, without really understanding what they own. With real estate, You can understand exactly what you're investing in. You can walk through the property. You can talk to the tenants. You can analyze the neighborhood. You can calculate the expenses and income. It's tangible. It's real. You can see it, touch it, and understand it. That understanding gives you confidence and control. I've also found that real estate teaches you more about business and investing than stocks ever could. When you own rental property, you're running a business. You have to manage people, handle finances, market your property, negotiate with contractors, and solve problems. These skills translate to every other area of business and investing. Stock investing teaches you how to read charts and analyze financial statements, but it doesn't teach you how to run a business. Let me share another insight about real estate versus stocks. With stocks, you're always chasing appreciation. You buy a stock hoping it will go up in value. That's speculation. You're betting on future growth. Sometimes you win, sometimes you lose. With real estate, I'm not chasing appreciation. Don't get me wrong, I love it when my properties appreciate, and over time they always do. But that's not why I buy them. I buy them for cash flow. Cash flow is king. It's predictable. It's reliable. It's what pays my bills and funds my lifestyle. Appreciation is just icing on the cake. When you invest for cash flow instead of appreciation, you're building a solid foundation that can weather any economic storm. When the market crashes and stock prices plummet, I'm still collecting rent checks. That's the difference between hoping for gains and earning income. People also forget about the power of amortization in real estate. Every month when your tenant pays rent, a portion of that rent goes to pay down your mortgage. Over time, someone else is buying the property for you. After 20 or 30 years, you own the property free and clear, and all of that rent becomes pure cash flow. With stocks, nobody is buying your shares for you. You have to come up with all the money yourself. Let me break down a simple example. You buy a rental property for $200,000 with 20% down. That's $40,000 of your money. You get a 30-year mortgage for the remaining $160,000. Let's say your mortgage payment's around $800 a month, and you rent the property for $1,500 a month. After all expenses, you're making $200 a month in positive cash flow. But here's what's really happening. Each month, about $400 of that $800 mortgage payment is going toward principal. That's $400 of equity you're building with someone else's money. After 30 years, you'll have made $72,000 in cash flow, but the property will have appreciated, let's say, to $400,000, and you'll own it free and clear. Your $40,000 investment became a $400,000 asset, and along the way, it paid you $72,000 in cash flow. And I haven't even included all the tax benefits. Show me a stock investment that does all of that. Another thing I love about real estate is that you can create value. With stocks, the value is determined by the market. You can't do anything to increase the value of your shares. With real estate, you can force appreciation. You can renovate a property, improve the neighborhood, increase rents, reduce expenses, or convert the use of the property. Every one of these actions increases the value of your investment. You're not waiting for the market to recognize value. You're creating it. I've made millions of dollars buying undervalued properties, fixing them up, and either selling them for a profit or refinancing to pull my money out and keep them as rentals. This is called value-add investing, and it's something you simply cannot do with stocks. Sure, you can try to pick undervalued stocks, but you can't force them to increase in value. You're at the mercy of the market. Real estate also provides something that stocks never can, a sense of accomplishment and contribution. When I buy a neglected property and turn it into a beautiful, well-maintained building that provides quality housing for families, I feel good about it. I'm improving my community. I'm providing a valuable service. I'm creating jobs for property managers, contractors, and maintenance workers. With stocks, you're just moving money around. There's no tangible impact on the world around you. Now, let me address the biggest misconception about real estate, that you need a lot of money to get started. People say, Robert, I can buy stocks with just a few $100s, but real estate costs hundreds of thousands. That's true, but it's also misleading. Yes, a property costs hundreds of thousands of dollars, but you don't need hundreds of thousands of dollars to buy it. You can often buy investment property with as little as 3.5% down if you're willing to house hack and live in one of the units. I bought my first rental property with almost no money down. I found a motivated seller who was willing to carry back the financing. I negotiated a deal where I paid him a small down payment and monthly payments directly to him instead of getting a bank loan. Within a year, I had increased the property's value enough to refinance with a bank, pay off the seller, and pull out more money than I had initially put in. There are dozens of creative financing strategies you can use to buy real estate with little or no money down. Seller financing, lease options, partnerships, hard money loans, private money, subject to deals, and more. The key is financial education and creativity. With stocks, you need cash. With real estate, you need knowledge. That brings me to my final point, financial education. The stock market doesn't teach you much about how money really works. You buy shares, you watch them go up or down, and you hope you pick the right ones. Real estate forces you to learn about financing, taxes, cash, flow, ROI, cap rates, debt to equity ratios, and 100 other financial concepts. It makes you financially literate. Most people are financially illiterate. They don't understand the difference between assets and liabilities. They don't understand how taxes work. They don't understand how to use debt as a tool. They don't understand cash flow versus capital gains. The school system doesn't teach these things. Your parents probably didn't teach these things because they didn't know them either. But when you invest in real estate, you're forced to learn these concepts or you'll fail. That financial education is worth more than any investment return. It changes how you think about money. It changes how you make decisions. It changes your entire financial future. I've met countless millionaires who built their wealth through real estate, and every single one of them credits their success not to the properties themselves, but to the financial education they gained by investing in real estate. Look, I know real estate isn't for everyone. It requires commitment, education, and a willingness to step outside your comfort zone. It's easier to just hand your money to a financial advisor and let them put it in mutual funds. But easy rarely leads to wealth. The path to real wealth, to true financial freedom, requires you take control of your financial education and your investments. Real estate gives you that control. It gives you leverage. It gives you tax advantages. It gives you cash flow. It gives you inflation protection. It gives you the ability to create value. It teaches you about business and money. And most importantly, it gives you assets that produce income month after month, year after year, regardless of what the stock market is doing. That's why I prefer real estate over stocks. That's why my real estate investments have made me wealthy, while so many stock investors are still hoping they'll have enough to retire someday. And that's why I encourage anyone serious about building real wealth to learn about real estate investing and make it a cornerstone of their investment strategy. The choice is yours. You can keep doing what everyone else does, working a job, contributing to a 401k, and hoping it all works out. Or you can take control of your financial future by learning about real estate and building a portfolio of income-producing assets. One path leads to financial security, the other leads to financial freedom. The difference is in the assets you choose to acquire.